Wall Street is set to see its biggest bonus increases since basically more than a decade. So this is data that was released by Johnson Associates. They look at the pay scale and what's expected when it comes to pay increases among these Wall Street firms. And here's what they found. This year's expected increase are the largest since 2009, when several business areas were projected to receive bonuses that were 30 to 60% higher than the previous year, according to Johnson Associates. Now, overall bonuses for investment banking underwriters are forecast to jump 30 to 35% from the year prior, while investment banking advisors and equities traders can expect a 20 to 25% year-over-year bonus increase. So what is the justification for these pretty significant bonuses? Well, the argument here is, well, the Wall Street firms are also experiencing a labor shortage, so we need to pay more in the form of bonuses to retain talent, to ensure that we retain these wonderful hard workers. The other argument is booming deal activity, a hot IPO market, and climbing equities means bankers and traders are in line for outsized performance-based compensation. I want to just show you this chart that CNBC put together that gives you a sense of just how much these bonuses will be for various people working in Wall Street. So investment banking, underwriting, as I mentioned, 30 to 35% increases in their bonus. Sales and trading, you've got 20 to 25%. Investment banking, if you're working in an advisory role, on average, you're seeing a 20 to 25% increase in your bonus. And private equity is getting a nice bump as well, with 15 to 20%. Now, when they talk about increased business activity, I'm curious if they're referring to any substantive business activity or if they're just talking about wheeling and dealing in the stock market. Because one thing that we've also noticed this year is that corporate stock buybacks are at record levels. And remember, a lot of these Wall Street firms, a lot of banks are receiving cheap money from the Federal Reserve thanks to their monetary policy. And so what do they do with that money that they get from the Federal Reserve? Are they investing in businesses? Are they doing something that's actually beneficial for American workers or the economy? Or are they just paying themselves? Well, S&P 500 companies in recent weeks have disclosed buybacks totaling $145 billion for the third quarter, and the total is likely to surpass $224 billion by the time all reports are in. That would be above the $223 billion in buybacks recorded in the fourth quarter of 2018, which was a record. So, just because you're seeing these pay raises or these bonuses among these Wall Street firms doesn't mean that they're actually doing something that's beneficial to the economy. They're taking advantage of cheap monetary policy, the cheap money that they get their hands on, and they're finding ways to invest it in themselves.
Yeah, so look guys, I wouldn't mind the bonuses and I understand why they do it, and they don't have a labor shortage like Wendy's does, but people are making money hand over fist. And so that does create a hot market for hot bankers, God help us, right? So I understand all the economics behind that. But the part that they never talk about in moments like this is, yes, but what happens when it crashes? So if it turns out it was a bubble, and there was no real value there that they were creating, and later all those stocks crash and you lose money from it, do those bankers then give back their bonuses? No, of course not. No, they take home all the bonuses and then they go, there was nothing we could do. And then they say, well, look, you got to retain our top level talent here to run these banks, even if they crash. Why do I say all this? Because it already happened. This is the second largest increase since 2009. Why was there such a big increase in 2009? Because the crash was in 2008. And so after the crash, they still got some bonuses, but in 2009 they went back to big bonuses, right? Right,
but what type of policy was implemented under the Obama administration to basically recover the economy? It was kind of quantitative easing by the Federal Reserve. So the same monetary policy that the Federal Reserve is engaging in right now. And that policy creates this unequal and unjust economic recovery, where those at the very top, in the case of 2008, those who actually destroyed the economy get paid handsomely and everyone else suffers.
Now, mind you, one other thing that's important here. Everyone on cable news is demagoguing about inflation, and they're saying part of the problem, I did a segment on this about Stephanie Rule, but I've now seen a number of them do this. Part of the problem is higher wages, they say, for the average American. It's leading to inflation. No one has done a story about too many Wall Street bonuses leading to higher wages, leading to inflation. But they get way more money than you guys do. I mean, that overall, their wage increases is monstrously higher than yours. And they can say, hey, I deserved it, blah, blah, blah. But you can't say the average guy is making too much money because he moved up from $7.25 to $7.75 an hour. And we got to make sure his wages don't go up at all. And congratulations to the Wall Street bankers. They get another couple of $1 million a piece, right? And that doesn't affect inflation.
Exactly.
So their hypocrisy is hilarious. Thanks for watching The Young Turks. Really appreciate it. Another way to show support is through YouTube memberships. You'll get to interact with us more. There's live chat emojis, badges. You've got emojis of me, Anna, John, JR. So those are super fun. But you also get playback of our exclusive member-only shows and specials right after they air. So all of that, all you gotta do is click that join button right underneath the video. Thank you.